All right, well, we can hit this button. This button makes it work. Oh, yeah. Hey, welcome, everybody. Happy Tuesday. How you doing out there? Election Tuesday. I don't look red anymore, so this should be good. Let's see how this goes. Hey, we're financial advisors here at Jazz Wealth. We call this the closing beat, and I'm kind of working on like a little refresh, make this a little bit more jazzy looking for you guys. So we're playing around with some ideas. Maybe changes are coming there, but for now, I'm just happy that this is all working, Can't really complain about that. Welcome, welcome. Pandemonium, comments, Debriga, Marcus. We got Doc in the house. Missy, hey. Mr. Bishop, greetings. Hey, we are going to talk about the stock market, a lot of different things here today. I've got a lot to bounce around to because there's really a lot going on under the surface. You know how sometimes I say, there's not much going on, sit on your hands and things like that. That is not the case here today. So we're just going to cover it all. All right. So the stock market, we've got the midterm elections coming up here. The stock market is clearly looking for division. That would mean Republicans taking majority control there. And so we'll see. I think that if that happens, you have a uneventful stock market tomorrow. Well, we won't probably know tomorrow, but if it's some kind of blowout and we do know and there's no runoffs or anything, I think it'll be kind of uneventful, really. And that's because the market likes gridlock there, and it's largely already kind of factored in that that's what's happening. If by chance there's a Democratic win and there's full control over Congress there, I think that's likely going to pull stocks lower. The issue there is we would expect more corporate tax increases. You'd expect additional spending, government spending there, which has been proposed by them. So that's not picking on them or anything. That's where we have their thoughts at the moment. So you expect that to happen there. But even though we may not know what happens after tonight, very likely we won't know after tonight, don't go anywhere, right? Because we have inflation coming up. CPI reports coming out on Thursday. Core CPI happens to be where everybody's looking, and because we're trying to back out those energy prices, the cost of gas, energy in general is just really ridiculous. So whether you go natural gas, however you want to look at it there. And so that's rapidly becoming the major focus is core CPI, the headline number there. So I'm going to put out my guesstimate there. I think we're going 6.47 year over year. The estimates are for 6.5. I think we beat that by just a touch there. But anything in that ballpark would be good. And so hopefully we're just wrong and we see that it fell apart. But you guys could probably tell that's not going to happen there. But my guess is going to be 6.47% year over year for the core CPI. Now for the stock markets here today, what a range, right? What a freaking range. Let's try something here. We're going to go over to the 5-minute chart. Let's do it that way. So if I go over to the 5-minute chart, take a look at this here. This is not crazy volatility, right? But for today, it kind of is. So look at what we have here. So the markets open up right in here, 9:30. We just come out of a nighttime rally there and fall apart, man. Just fall apart early into the day, little relief rally, and then it falls apart, only to recover, working its way all the way back there. Now, technically, that's a positive open. I should probably share it with you like this, right? If I go over here and get that to load up, this thing's just clicking along a little slow. There we go. That's probably a better way to look at it because this is actually the close, right? So moving really slow, actually. This is the close from yesterday, and so I've got a little pre-market in there and a little post. Nope, actually no post-market in there. So we got a little bit in there. You can see the response to what's going on. And I think these guys are actually having a platform issue. I think that's what's going on because the dates are not right. Everything is a little bit off there. So that data is not coming through accurately. But up top, this is what actually happened. So a massive move as we basically start the day, early pre-market and stuff like that, fall apart during the day only to recover. That's a big range, right? So a bigger range like that, to finish positive, that's what leads me to say, hey, they're leaning Republican there, right? We're expecting that is what's going to happen, a divided government anyways there. So that's what was happening there. Now for earnings season, that's not going so well. It's largely over. We're coming on the backside of it here, so it's pretty much over there. But what's happened is we measure the growth of the S&P during earnings season. In other words, we look at all the earnings and we look at the growth of all those companies as they participate in the S&P index. And typically we say, well, we'd like to see 3-4% growth, something like that would be really good. Anything above that's really good, at least right now. Well, what's happened is we are trending at 3% growth, which is good. But the problem is all that growth, every last bit of that growth comes from the energy sector there. So that part's not too good there. We don't want to see one sector, one stock, one little group of industry stocks there lifting the tide, so to speak. And that, unfortunately, is what's happening there. Anyways, so that's what's going on. The elections, like we said, if we have a divided government, it's good for the market. I've been saying that. So nothing new to you guys there. Less policy changes. The problem, though, that I think is kind of putting a little cap on the market is if Republicans do end up taking control of both the House and the Senate, then there could be gridlock, right? And what's next? We go through the holidays, we all have our happy holidays, we go into the new year, and it's time to vote on the debt ceiling. And so if they're just bickering and fighting like crazy, that's going to keep, well, volatility is not super high right now, but that's going to make volatility a lot higher, or at least continue into that time period. So basically, for the next 6 months, there's a whole lot that we can actually look at here. So far, you can see that the S&P is pricing in division and not gridlock. Like, those are going to be the key words there if you want to change your drinking word game. And the reason that I say that is because the VIX is not high. If we were pricing in gridlock where nothing gets done, you would see the VIX elevated, or at least starting to become elevated there. You don't see that at the moment, and so that's where we stand there. All right, this might take a little bit extra here because this little guy is moving kind of slow. So stocks in the news here for what's is their per barrel average sale price, which is hedged, by the way, so it's a little bit off, 89.79 per barrel, $89.79 per barrel. So that's really good. Their per barrel cost, $26 there. So what does that tell you? They got a ton of free cash flow. They're making nice profits, right? What are they doing? They're not keeping it and buying jets and stuff like that, unlike what Washington would make you think. They have taken 75% of that so far and returned that back to shareholders. $1.6 billion in the form of buying back stock and paying out a respectable dividend, right? So good for them. That's an earnings beat across the board there. Lyft was kind of the trouble spot here today. You notice the weakness there. Apparently, there's a little bit of people moving towards Uber. Uber's getting more market share there. They missed on revenues. Earnings per share came in a little bit better than, revenue per active rider came in a little bit higher than expected, but that was because their higher take rate there, and they guided lower, so the stock made new lows there. Take-Two, I thought this would be a fun one to look at after looking at EA Sports. There was an overall miss. They are trying to expand faster in terms of their number of games, right, what they can put out there. And so research and development, that was the issue there. You look at their earnings there, I forget what the number was, like 13% or something more than expected. So that was the trouble for them. I would add that if we go back over charts page audio, this is good. All is good there. That's because we moved it. Remember, we have to move that to the top. As we were moving it around, we put the audio to the bottom there, I think. So Easy Fix. The other stock in the news here, NVIDIA. These guys are crafty. They think they've figured out how to make a chip that gets around the U.S. export ban to China rule there. Actually, they have. They're not saying they think they have. They actually have there. So really, really, really interesting for them. Dow DuPont, really quick, I'll just point that out. So they are the latest to buy back shares, right? So that stock up 7% on the day. They're killing it there. Earnings were good, but doing a $5 billion buyback. And what do you guys know from watching the show when you can hear me actually talk? What do you know? Stocks that are buying back shares are and do outperform almost everything else, right? There's some small cap growth stocks that would outperform that, but you gotta keep that in mind, right? Buying back shares, you can have a problem with it politically or whatever, but you might want to participate in there because that's where the money's being made at the moment. That could change, but that's where we stand. Kohl's, the CEO leaves. Why is that a big deal? The stock was up 7.33%. Remember we talked about yesterday, the headlines just telling you in a short snippet what happened. What do we do after that? What's the reason? Why is the stock moving higher? Well, if you dig a little bit deeper, you're going to find out that the interim CEO is a 70-year-old Mr. Shoot, I forgot his name. What's his name? 70-year-old guy who was appointed by activist investors. He was appointed to help and push Kohl's towards a sale. Well, he's now the interim CEO. What do shareholders want out of Kohl's? They want them to sell the company. So while he's the interim CEO, that opens the door for potentially a sale. Lastly, I'd like to point out Tesla down a little bit more today. That made a new low. I saw all the comments about Elon Musk's net worth falling by 200 million and all that. He's got his work cut out for him. He asked for it, but he's got his work cut out for him. The news today was they had to recall 40,000 vehicles. This is really no big deal. If Harry is around or was around, I would be on his side with this one. This is not a big deal at all, right? So put this into perspective here. If you have a Tesla, by the way, I looked it up, 2017 to 2021 Model S and X vehicles, you may lose a little bit of power steering assist when driving on rough roads or if you hit a pothole. Aw, how many of you grew up with no power steering in your car? Aw, my Tesla losing power steering. It's not danger. You have to just steer the wheel. You have to put some muscle into it. Anyways, the reason it's not a big deal is because 97% of all those vehicles that have already been that were affected have already had the updates installed, right? So we're talking next to nothing here. You want to make a big deal out of something, you go, okay, that's now the 17th open recall, so not over the life of their history. They have 17 open recalls right now affecting 3.5 million vehicles. That's probably where the pressure is. We're adding to it. That's a cost that comes to replace some of these things. So, that's something to point out there. What else do we have? A little fun fact for you. I got a cool story for you here in a second too. All right, fun fact. So yesterday we've got the 10-year hitting the highest level since just before the financial crash. You got to go back to 2007 to see that one there. Now, so rates are going up everywhere, right? And this may not apply to you, but think about this. So in the U.S., mortgages are mostly fixed, right? It's a term mortgage. So you have the same rate for the life of the mortgage, and the bank takes the risk that rates go up or that maybe they go down. That's why most Americans have a mortgage and do not own their home outright. Only Norway and Sweden have a greater percentage of people that have a mortgage on their property versus own it outright. Italy ranks number 1, by the way. So in Italy, there's about 11% of people have a mortgage on their property. Everybody else, the 89% of the others, they own their house outright, right? So it's just different where you go. Now, the trouble is in Australia and New Zealand, right? They have more of a variable setup there. So their rates are going to reset to the higher rates, meaning people are going to have to make higher payments. We have that here in America too. It's just not as common as it is over there. And so their costs are going to go up, right? That's a tough one there. What happens if that bleeds over little by little and starts affecting things? I'm not saying it will, but something different to look at there. Also, I want to point out the dollar, right? So I was looking at the UUP. I'll stay away from the charts here just so the audio doesn't go messy, but the dollar rejecting the last rally. Why do I keep bringing that up? This quarter was spent by all the companies that have a lot of their sales come from overseas saying, we're not making as much money because of the Forex conversion, the conversion from foreign money to US dollars. So if the dollar falls, that's beneficial to them. When we get to the next quarter and all these companies said, we reduced our expectations because we didn't think we were going to make much due to the strong dollar. If we now have a weaker dollar throughout the quarter, that's not going to hit them as hard. Those stocks, that sets you up for the next earnings season if you want to pay attention to that. Also, Bitcoin with a big drop today, 10% drop almost, and did break to new lows actually. I don't know what's happening there. The crypto winter, as they call it, which started in the summer, which is funny, continues. That's a tough time to be over there in the old crypto winter. I didn't really follow much of it. Did close decently off its lows. It hit about 16,000, 16.8 or something like that. So that's a tough one. Okay, coming up tomorrow. What do we have here? Coming up tomorrow, you got some earnings there. Roblox with their earnings, Wendy's, Grainger Worldwide, Jazz Pharmaceuticals, just because they stole my ticker, Rivian, and I believe Wynn is in there as well. So we'll see how that goes. If you have any questions, I will attempt to answer your questions and see what we can do there, but I'm happy to help. You got to go out and rock the vote. Be a fun one here in Florida. It's one of the places to watch. There's a handful of tougher areas there, but I don't know. Whoever you vote for, I wish you well. I hope they win. I hope they win for you. Shenanigans already reported in Arizona, so that'll be the late night stuff to watch. A couple hot races going on over there. Yeah, a dream last night. He was rooming here in North Carolina with a friend from Texas, never been to North Carolina. He invited you and Eric to spend the weekend, I imagine. And you guys actually came out. We had a blast. I do like myself some North Carolina, man. I do. Yeah. The last place we were at was Winston-Salem. Very cool area. Financial wisdom, why is the dollar so important to earnings? Now you know. Now you know. And it's only because they made such a big deal out of that. Remember, they were lowering their earnings expectations going forward because of the dollar, not because of anything weaker or anything, it's a small piece of it, but they were lowering it because of the spread in the conversion rate there. Yeah. So very cool. We will see. I hope it's something that actually stays lower and actually drifts a little bit lower, because that'd be fun to actually see that in real time there. You got an $83 call. Why you got an $83 call? I mean, it's on the path to go above 83, but I don't like the call selection from the purchase date. That part I don't like there. Oh, we had to participate in the goofy stuff. I see what the comment says now. Here's the both parties winning the election. Yeah, right. You're going to end up with some winning, some of the other, but you know, as long as we have division, I'm pretty fine with that, because I'm going to play for the markets, right? Yeah. Your wife signed a settlement. She should get it in 30 days, but the IRS put it in hold to see if she has to pay something is because the settlement is more than 100,000. That part's normal. Sounds like a pretty good chunk, pretty good settlement there. That is normal. It's like if you win the lottery, I don't know if anybody won or not, but if you win the lottery, they check first. You don't just get to walk out with the money. They make sure you don't owe anything first. Yep. I love it. Covered call. You sold a covered call. Oh, I got what you're saying. So you didn't buy a call. Okay. Now we're talking there. So, well, okay. So you're headed towards 83. That's a tough one there, but you have until Friday? Ooh. Yeah, I mean, there's nothing you're going to do about it now anyways, right? You're going to hold it, right? Because you've waited too long to roll it, right? So you're not going to roll, and it's not going to make any sense to do that now. So you waited too long for that. Remember, if you're going to roll and you're unsure, now this would have been a while ago, so I can't blame you for not rolling, but if you're going to roll, it's got to be right around that 20-day period. Otherwise, it gets a little bit more difficult there. Somebody won the Powerball? Oh, well, it wasn't me. Yeah, there you go. At least you guys know. I wouldn't tell anybody anyways. Interest rates helping them as long as people can pay for those credit cards, right? So right now, the delinquency rate on credit cards is pretty low. It's not the lowest it's ever been, but it's pretty low. And so as long as people can still do that and make those payments at the higher interest rates, we don't have a problem. I worry that they went up so fast that credit card companies have been real quick to say, well, let's keep up with that. I worry that that's going to start raising that delinquency rate. Yeah. You got to pay for those things? They didn't teach me that in school. All right, I'm going to wrap it up there, and we'll be back tomorrow to do it all over again. Thank you guys for hanging out with us for the day. Hopefully you learned something, and I helped you in some way. And if I did, you hit the subscribe button, will you? I think you will. You do the trick there. Thank you. See ya.